Okay, Ethan.
Cool. Here we are
Hi.
with audio.
Yeah. So I'm joined here by Ethan today in this beautiful environment in Croatia. We are both attending Adria FinTech conference.
Yep.
How has it been for you so far?
That was great. I love small curated conferences. You know, some of these big conferences, like what I was just at in Paris. You know, there's 100,000 people come to these
Wow.
things, and you still meet 10 or 20 interesting people over 2 or 3 days, but you had to go through all the effort and deal. Where you come to something like this where it's more curated, and you also meet 10, 20, 30 really interesting people. So I actually think there's a lot more value. There's also birds.
Wow.
There's a lot more value to be found in the networking at these kind of events. Big events are also really interesting, but you actually it's even harder. You know, for at this big event that I was just at, they they said they had something like 4,000 startups, and I think the number's a bit inflated, but it's actually so many things that you actually lose motivation to even look at all. Because if you know that you've got like 50 blockchain or crypto startups to kind of dig through, then you know you're going to maybe see 1 or 2 things that interest you once you kind of filter through them. But if you've got a couple thousand startups of all kinds of things, then it's almost impossible to dive in and start filtering and find anything. It's so I'm a much bigger fan of these cool small curated things.
Okay. So today's the topic of today's talk between us is the security token offerings, and I believe that you are one of the best persons to talk with about that, and also following the keynotes that you had yesterday, I'm even more excited about that now. Okay. So can you just briefly introduce yourself,
Sure.
like who you are, what are you doing, and where did this passion about security tokens comes from?
Yeah, so a mixed background of a lot of these things. So I built a couple different digital and e-commerce companies in the U.S. and in France, and then I joined a venture capital fund in Hong Kong, which ended up running a bunch of accelerators across Southeast Asia. So from the entrepreneurship side to the venture capital side to then the corporate innovation piece, which is really about helping startups and corporates work together. So that's a lot of corporate business development. So all of those things together kind of created a very interesting skill set in terms of network and who I know and the relationships that I built in those spaces that have really allowed me to work with a lot of really cool startups, helping them. Basically, if you're a startup that's in Lithuania or Slovenia and you want to go to Western Europe, or you want to go to Southeast Asia, or you want to go to the US, that having people who are already very familiar with doing that process and have the network to help you talk to. If it's not the person you need to talk to, it's the person who knows the person that you need to talk to. So those kind of things are really where I've been focusing a lot of the past couple of years. And with Nest Venture Capital in Hong Kong, our accelerators, we built the programs for DBS Bank, OCBC Bank, Bangkok Bank, American Express, AIA Insurance.
Wow.
A lot of these really cool, the biggest brands in their space in Southeast Asia, and because a lot of FinTech and insurance, which was a lot of those corporates in Southeast Asia, is about the unbanked or cross-border remittance, or many of the problems that blockchain and cryptocurrencies and at that point not really crypto assets, but those are things that you can solve well in those spaces. What that really kind of pulled me into the whole crypto thing earlier than I would have expected, because part of running a very high profile accelerator in terms of an expensive program that's meant to accomplish a lot for a very big company, they have very significant anticipations and goals behind that, and part of what you really have to do is make sure you're able to drive the conversation between the corporate and a specific startup, because both of them are very bad at working with the other. And if your job kind of in the middle, and what my team was amazing at, was to really drive that conversation between them. So forcing them to both be at the table every week to talk about specific things, and did we accomplish what we talked about last week, and how are we doing? And in order to do that, you need to at least understand in general what the startups are doing. and because many of these were doing things that were maybe not yet tokenized, but were kind of before tokenized in the sense of thinking of what that would look like, and then early blockchain solutions or things, all of that stuff together forced me to get into this early. So that's what got me going in this space and what got me excited about it. As far as security tokens, I think the biggest issue is I kind of very early on felt like the ICO thing was crap and wasn't going to go very far for a very simple reason. In the venture capital space and in innovation in general, we are focused on venture building, on creating businesses. And the ICO space didn't feel like people were creating businesses. It felt like they were pitching very early stage concepts. And then if they got enough money, they would build a business in the next year, 2 years, 3 years from that, raising crazy amounts of capital and not really executing a tremendous amount on that. And it didn't feel like people were building things. So I kind of lost an motivation to really plug into that specifically, but had incredible motivation to and passion about what blockchain and digital ledger can, what these technologies can bring to so many trust authority business models and intermediary business models and interesting things. And then the next evolution of that was really just once I started to understand what the idea of security tokens, tokenized securities meant, then we see how this is revolutionary for all these different business models, small and medium businesses, profitable revenue generating type companies like your own, which is a startup but a small business in the sense of it's not unknown what you're going to be doing. You have clients, you have revenue, so you're not quite a scale up in size, but you're not completely a startup in the sense that there's a lot of unknown. Revenue share is a brilliant thing for that specific space, and it's brilliant for real estate investment, it's brilliant for intellectual property, it's brilliant for all of these ideas where a community can get behind a concept. So that's what got me very excited about the space.
Okay, so we're going to get back to that a little bit later. Just a quick something I need to say because our legal team told me I need to say. So we're going to be talking about investments today.
I'm not a lawyer.
And he's not a lawyer, and none of this is to be considered as an investment advice.
That is important.
It's just our personal opinions on this.
Don't sue me.
So, Ethan, the idea behind Kriptomat was to enable anyone to actually enter into the world of cryptocurrencies. When I say anyone, I mean especially those who are not that tech educated, people like my dad, who find it hard to understand what this is all about. So we wanted to bring this closer to people like that. And also our users, in average, they're like 40 something years old. So this is the average age of our user, which is like an awesome thing for us. So they also find it hard to understand what an STO is. So can you try to kind of describe in a couple of simple words what a security token offering actually is?
Yeah, so I think the reality is if we talk about tokenized securities, then if you understand what a security is in the sense of a regulated tradable asset, in the sense basically it's just a fancy word for investment, but these words this means that it is generally has oversight from your regulated authority. If you understand securities, meaning you understand how the stock market works, or you understand you've already made some kind of an investment into like a startup in equity or something like that, then you kind of understand this framework of how you're creating a relationship legally between a business and an investor, and that there is more than just the promise of your utility token is going to create value and potentially be useful for you, which is, I believe that could be true in some of these cases. The reality is a security is a very clear relationship, legally defined, with significant infrastructure around it and penalties if you do these things wrong. And so you're creating not just a promise, because businesses can fail. So it's not, a security isn't saying that is a smart investment. It's saying that it is a real investment. Meaning that it's none of this ICO crap where the people didn't actually exist. They had fake LinkedIn accounts. The phone number didn't ring through. There was no one in the office. I actually don't believe a lot of the ICOs were like that. I think a lot of ICOs were not fraud. They were just very early stage ideas, potentially a little bit naive about how quickly they could develop the technology or scale a business around what they thought they were doing. Maybe naive is not even the word, maybe just extremely optimistic and hopeful and dreaming about the future, and didn't realize that you actually have to build stuff in order to get there, and that's a lot harder than you think. So the issue is a security is a legal arrangement between the investor and the company through the regulator, which clearly defines the fact that you're saying you're going to do a certain thing. So you're going to pay a revenue share on a quarterly basis because you have revenue, and that revenue is going to scale. As an investor, I look at the details of that deal and I say, that looks like that's probably an interesting thing for us to do. And so I'm willing to give money to that. And in exchange, you have to provide me every quarter with the revenue share. It's a legal contract. Now, you could not make any revenue, and that's okay, because that is just a failure of a company to scale, and that's not what securities protect. What securities protect is there is reality in the sense that you exist, your business model exists, all of the details we are agreeing to are validated. Whether or not things perform or not, well, that's whether or not it's a good investment or not. So a tokenized security, a security token, is simply a way to invest in securities, so like we do with the stock market, like we do in other things, without having to go through those intermediaries. So we're not having to go through the stock market, we're not having to go through the regulator for certain kinds of assets, but we do have to work with the regulator to organize this offering, because they want to make sure that the details are done right. So it's if you understand securities, it is absolutely not different than any other kind of investment that is regulated by the regulator. We're simply doing it without the intermediaries, or we're creating new intermediaries like Desico, which allow you to facilitate this conversation between you as Kriptomat and the regulator, in this case the Lithuanian regulator, to create your security offering and offer it to investors, and do all of the back office accounting and tracking and all of the compliance issues that go with those things. But actually none of this is new. Yeah. It's just the tokenization of it allows us to replace the intermediaries and find efficiencies.
Yeah,
okay. I don't know if that helps.
Yeah,
but
of course. So this also brings me to the next question. We as a company, we're like really excited about this, because it's something that already exists, but in a way it's a total innovation. And what do you think this brings? What are the benefits that it brings to the company, the issuer, the investor, and the market itself, the investment market? Yeah.
So I think the benefits that it brings to you are that it's the only way to really do, there are ways to, if you know the specific investors, arrange things contractually to have some kind of a revenue share or some kind of a deal between individual investors. Yeah. But sourcing that, dealing with the lawyers, that's actually kind of expensive. The only way to do this at scale is to actually do an IPO. But an IPO in the United States costs you about $2 million minimum, and then it is every year you have tremendous reporting costs and complexity. And you also don't want to be a public company at the size that you're at right now, because it creates an enormous compliance layer that you don't need. So I think that the benefit of tokenization in terms of doing an STO is you're able to get the benefits of a securities offering without the historical infrastructure that an IPO requires. What it brings to investors is an awful lot of investors cannot invest. So if you're a retail investor, meaning you're not accredited or you are not an institutional investor, then it is actually you're not capable, legally allowed to invest in many of these assets, because you don't meet generally the income requirements of being an accredited investor, regardless of whether or not you have the money to invest. So for the first thing for investors is STOs will create opportunities for them to invest in assets that they couldn't invest in before, or because of the costs of doing this, even if you have the right to invest in those things, the company might require such a high investment level because of the expense of doing it, that if you want to invest in a typically lawyer-driven conversation with the regulator into some kind of a security, the minimum investment is probably going to be in the tens of thousands of dollars because of the costs that are around it, the legal fees that go with it and whatever. If you want to put $200 into your company's thing here, well, that's a very small percentage of the revenue share, but you'll actually get the same returns for that small percentage as the people who put in a lot of money on a fractional level. So it's actually still, you're able to get the returns of a great asset just at the small piece that you can afford to put in, and that democratization is incredibly important for what this brings. But more importantly, there is no way for most companies to take a $200 investment from somebody directly, or a $1,000 investment, or maybe even a $5,000 to $10,000 investment, because the lawyer fees on that process are probably going to be in the hundreds, if not thousands of dollars for each contact. So if you mutualize that and democratize it through this concept of a security token offering, then basically those thousands of dollars or tens of thousands of dollars of legal fees and regulatory compliance stuff, they get spread across all of your investors, which means somebody can put in a very small amount of money and it doesn't cost you anything because you've paid for the package of dealing with people.
Correct.
So that's where this gets interesting. For you as the company, it allows you to reach more people that you couldn't normally reach, and to obtain benefits that you couldn't get without doing an IPO. And for actual investors, it gives them access to investments they normally couldn't invest into because they're not accredited, or they couldn't invest into because they don't have the amount of capital. So as I mentioned in the keynote, if you want to buy an apartment in a city like San Francisco or Paris, or as an investment, well, do you really have a couple extra $1 million to throw down on that investment to buy the whole apartment?
Correct.
But maybe you have $10,000 or $50,000 to buy a piece of that. And you can do that through real estate investment trusts today, but generally, like mutual funds, the fees on those, if you're only investing a smallish amount of money, the fees eat away at a lot of your investment gains. So all of that means that you need this new, efficient, automated way of dealing with compliance and issuance of a security, and that's what STOs bring.
Yeah, okay. So you also mentioned that earlier, and also my keynote yesterday was about that. People often mistaken or mix the words ICO and an STO. Some say that STO are an evolution of an ICO, which I don't agree in a way. But the only word that actually is there together, so it's both kind of tokenized, it's both kind of trying to pitch and raise the funds. But how do you kind of see those two things, and how are they different? Because we see many people now reaching out to us because they're used to processes within the ICO hype. They're asking same questions that they used to ask there, and these are questions that we cannot answer because there's no answer in the STO sometimes. But how do you distinguish those two, and is there any similarity at all in your opinion? And
Yeah, I think it looks like they're similar, but I don't think they are in a lot of ways. I don't think they're the same thing at all. So ICOs, almost all utility tokens are considered future utility by most of the regulators now, because at issuance you can't actually use the token to do what it's supposed to do because you haven't built the solution yet, which by definition calls that future utility, which generally means they're going to consider it a security. So ICOs are going to almost all be considered securities. That does not make them a tokenized security or security token, because they're still a utility. They're just being considered an investment that appreciates, and that you're brokering that out to people, so it's considered a security and needs to be regulated. However, if there's no asset, this isn't real estate or intellectual property or a company's revenue or a company's equity that you're tagging the token sale to, which makes it a security. So but makes it a tokenized security. So the ICO is a security because the process of the way that you're raising that money makes it a security, but it's not a tokenized asset because there is no asset that is being tokenized. So they are not necessarily the same thing. The next step of that then is that even if it is a security, if it's not a tokenized security, then that's fine. But security tokens are really not about startups. They're sort of about startups. So if we say there was about $25 billion dollars raised through ICOs, that's a decent amount of money. So that's blockchain startups. If we say there was last year about $35 billion raised in early stage venture capital, so that's regular startups inclusive. And that's a pretty good number. There's a $1.4 trillion funding gap in Europe for SMEs, for small and medium businesses who are missing $1.5 trillion to grow. Now, a lot of those companies might not be good businesses or good business models, and that's why they can't get capital. But an awful lot of those businesses are actually good companies that are good for the economy, but that are missing money. There's I forget the number, but it's several multiples of that for the developing economy. So even just in the SME space, it is several orders of magnitude above, like 100 times above what we saw with ICOs and blockchain startups raising tokenized capital. So that's already a big space. If we start talking about intellectual property and more importantly real estate, so intellectual property, we're talking about patents, films, music, art, things like that. But even just with real estate, we are talking about tens and upon tens of trillions of dollars of assets being invested into and traded on a yearly basis. So tokenized securities, digital assets in this way, are really not a startup conversation. They are useful for startups, although I think there are many ways that you can raise equity money, which is probably the smartest money for startups, not revenue share. I think revenue share is something that you raise when you're creating revenue. And startups, if their revenue is a year away, a year and a half away, 2 years away, I don't think a revenue share is a very interesting investment that's going to be easy to get money into. There's a playbook about how this is done and how it's worked for quite a while now, and that is you have a great idea, you need money to build something and test it and scale it up in a first way, and you do that by taking some equity money. People don't like it. The whole anarchistic, crypto, blockchain world is like, I don't want to give up some of my idea to go for something, but there's an axiom kind of in the venture capital world, which is it's much better to own 5% of something that scales significantly than to own 100% of something that stays a small business or dies. And first-time entrepreneurs in the venture space don't usually get that, or they feel like they're getting abused, but they tend to underestimate significantly the value that good investors bring outside of the money, that they actually create scale and opportunity for these companies. That's not always the case. So for me, that is why this matters.
Okay.
This is about startups, sort of, but it's really about so many other things. So the ICO thing is really just the fact that it's tokenized and it looks similar, but there's very little in common. And I think if you want to do a utility token and issue a security token for different reasons, because you need utility to have the token actually be the fuel of your startup, of your idea, but then you need the digital asset in order to raise capital or do other things, I'm not sure you want to mix those together. That's a conversation that you need to have specifically to your thing, but I think these are two different concepts.
Okay. The maturity of our security is for 20 years. So do you see an investment in STO as a long-term or short-term investment?
I think if you think it's if since almost all these, I've spoken to hundreds and hundreds and hundreds of companies the past year that are wanting to do something in a security token space, with all kinds of different business models in all kinds of different regions. Some of them startups, some of them SMEs, some of them movie producer or real estate developer or whatever. All these kind of interesting businesses, and all of them just want to do revenues. Nobody's really looking at the equities in this space in the big sense. I do think there's an interesting space for ETOs, equity token offerings, but I also think we already have a lot of existing things in equities. You can do a safe agreement, which is a very simple convertible note. It doesn't cost a lot of money, and it helps you arrange that. So I think that most of this is about revenue, and if most of it is about revenue, then if you're thinking short term about security token offerings, you didn't understand security token offerings.
Okay.
Because why would you buy something that gives me X% of your revenue every quarter just to flip it next week or next quarter or even this year? Because the reality is we shouldn't expect those security tokens to, they may scale in terms, they may appreciate in value, but the real value of the asset, especially in the early stage of that, is the revenue share. And before there is significant scale, so the revenue share is important, which creates a scarcity issue because now more people want into the token, and it creates this cycle. The only real money to make is on the revenue share. So if you flip the token, I don't think you're getting great returns. Maybe you could on a specific STO, but I think this is a mid to long-term thing. Midterm in the sense of you need to at least realize some gains on that investment before you get out of it.
Yeah.
Or midterm in the sense that you realize some gains, but also because of scarcity or other things, the token itself increased in value, so you make some money whenever you trade out of it as well. So that's a case of it. So maybe medium term, but probably for me more long term. This is, I think ICOs and utility tokens are day trading in the world of stocks. And I think STOs are value-based investment where we pick a good horse, we put some money on the table, and we let it ride.
Yeah, okay. Oh, okay. So I have two more questions for you. One is about, of course, your upcoming book.
Yep.
So honestly, I do not know many people that wrote the book. So
halfway done. So it's
a couple of weeks ago, I hosted Luka Gubo from Blocktrade, the CEO, and he also wrote the book. So now you guys are just coming and popping up.
Yeah.
So what are the main takeaways from your book, and what did you actually write about?
So the book is a mixture of things. I'm about halfway through with it. A lot of it is interviewing all of the people who are much smarter in this space than me, to understand great things from them and get smarter myself and be more informed. To make sure that also the book speaks from relevancy. It'll also be one of these. We can only just do books like this now in terms of innovation, because it's the kind of book that probably needs to be updated every month or every 2 months, because otherwise it's going to be out of date. So it needs to be digital.
Yeah.
So when I put that thing on Amazon, and you can download either the digital version or you can download the print. You can have a print version. Every time I change the PDF, whenever you download it, you'll get the new version of the book. But also they'll print a different one whenever you order it now. I think that's a really different way to see publishing nowadays, which is really cool to do, because otherwise a book like this on security token offerings, I do one of these keynotes on this subject almost every week right now, if not 2 or 3 times a week, especially in May. And the reality is I change my slides almost every conference because there's something new to talk about. And I know people who've been talking on corporate innovation or artificial intelligence who are using the same deck they used 2 years ago, and that's okay because it's still incredibly relevant. It's not that it's bad. They're providing great value to their audience. If I use the same tokenized securities or crypto assets deck I used a year ago, we weren't even calling these things tokenized securities or security token offerings much more than a year ago. This thing's moving really fast at this point. So the book is really about being a part of this process, like the Crypto Assets Institute, of democratizing these ideas, so that people go, wow, I had no idea that this was about that. So you get every single one of these conferences, every single one of these opportunities to present, I get people come up and be like, I'm a lawyer and I didn't realize you were talking about, I didn't realize that was that, because I actually understand that. Okay. I understand securities. I understand these things, and I didn't know that this was what that was. So now my world has changed.
Wow.
Or the film producer who already knows all the money that he's going to put in terms of the investors for his next film, but is able to do this now in a tokenized way. So it changes the relationship between the investor and the asset, and then potentially will eventually create liquidity, so that those people can move in and out of that investment. That's another question and another topic, but I think that each of these kind of people, law firms dealing with portfolios of patents, who normally have to sell those patents in order to commercialize them if they don't want to take on the process of licensing them and becoming a licensing company to do that. Well, now what's amazing in real estate development, in intellectual property, and so many of these things, you get to retain ownership of the asset. It's still yours, and you make money with it. So instead of wanting to buy that building for, I don't know, $50 million and renovate it and sell it to people unit by unit and make $80 million, and you walk away with 20 or 30 million, but the bank owned the building and then the people who bought it owned the building. So as the developer, you don't own anything, but you made money by facilitating all of these transactions. That's a good business model. But a lot of real estate developers don't get to keep their asset. Well, if you'd have tokenized that instead, people would have given you money that you used to buy the asset, so the bank isn't anywhere in the mix. And they didn't buy equity. They didn't buy the apartment. They bought into the revenue share. You will go out and rent those apartments or that office space, create revenue that then allows the people who gave you money as an investment to make a very interesting return. And math all has to work in terms of the investment, but they make the money that they're looking to make. You make money because you're commercializing this space, and you own the asset. That's revolutionary. Yeah. So the idea of the book is really just to dive into all the ways that this is changing how we approach finance, how we approach investment, simply because it's it's going to evolve. There are efficiencies here. There are things that we will keep doing the old way and things that we will do a new way, because this drives costs down, creates efficiencies, brings different kinds of trust in, replaces historical trust intermediaries, potentially like stock markets or other things like that, with new ones that can be automated and programmed in a way that this all just goes faster, easier, allows regular people with investable money, but not necessarily a lot of capital, to participate in higher yielding investments, which is very interesting. Could even allow people who are incredibly poor in ecosystems to be able to invest in things, simply because if you're in Jakarta and you make $2 a day selling fruit, but you have 10 cents left over, that's not a lot of money, but you have your life and your ecosystem and your economic world that actually works. But imagine that the home that you live in costs $500. Well, maybe that 10 cents a day or 20 cents a day or whatever would actually be, you could potentially invest in a tokenized version of that kind of an asset. Like, there are ways to look at that. I mean, today we have microcredit loans where you can for $40 you can buy a family in a developing economy a cow, and that cow becomes the family business of a family of 4 and gives them a life. Imagine if you were able to take small, tiny amounts of capital that to us in the Western world seem insignificant, but still be able to invest those into assets that are actually much easier to get into in terms of total money, but for them just as inaccessible as for us to buy a $5 million loft in San Francisco. I mean, in terms of the economic leverage of that, all of a sudden you're now providing opportunities for people to leverage capital, even though it seems like tiny amounts of money. In their world, it's the same delta between what they have and what the asset costs and then the returns, as it is for us what we have, what the asset costs, and what the returns are. So there's ways to help everybody along the system. People who are professional investors who are looking for new ways, people who are middle class, upper middle class, who have investable money but they don't have a fortune, or potentially others in new ways that people will define to do that. So for me, it's about democratizing how this is just, we just don't even actually know all the cool things that people are going to do with this.
Is the book already available?
Oh, it's about halfway written. So this will be third quarter.
Okay.
It's in process. Got a lot of very interesting people that are wanting to contribute. So if you happen to really be into this stuff and you know some cool people that that are great thought leaders, then I'm happy to talk to them about interviewing them and talking to them. But that'll be out in the end of normally in third quarter. And if you go to my website, you can actually ethanpierce.com. There's the STO book page, and you can sign up to get a free digital copy when it comes out.
Great. Okay, this brings me to the last question.
Sure.
So, with Kriptomat, like, it's an important day today for us.
Yep.
The payments for our offering just started. You know what our business is about, and I've been talking a lot with different people here yesterday and today. I would like to hear your opinion. Is this as a fundraising method for our business? Do you see it as a smart thing to do? And why? Yeah,
so I think when you have an idea and you want to build that idea and you need money to build the first pieces of your idea, I think today you still can't get around equity capital in order to build your MVP, first version, figure out some product market fit, do all the stuff you have to do. Once you're actually showing some traction and some revenue, or even more so in your case, then I think it's very interesting to find the mix of equity and non-equity diluting capital, because scale is very important to get a business to its scale. Is not just about size, it's also about speed, about how you get to your maximum level. So eventually every business is going to plateau in terms of how much revenue it can make and how much reach it can have. So scale isn't just about bigger numbers, it's about getting to that plateau as fast as possible, so you really own your market and you own your space in that way. And you can't do that without capital. So you can bootstrap things to a certain point, but sooner or later you need money to grow, to grow faster so that you get to that place. And then maybe by growing faster, you reach more of the market before other people take part of the market as well. So I think you cannot not look at equity capital as a way to go as fast as possible. But once you have enough revenue, once you have traction to show that revenue is increasing, so really Facebook would have been a very bad STO, but Uber would have been a fantastic STO, because one of those models, which eventually Facebook makes a fortune, but in the beginning, every new user did not equal new revenue. Whereas Uber, or those kind of models, mobile apps, platforms, SaaS, things like that, every user equals revenue. So technically, user acquisition and growth equals revenue growth. So that is a great thing to tap into, where you can tell a story of, we are scaling up. Every quarter we have X amount of growth. X amount of growth means that much more revenue to share.
Yeah.
So you need to find the happy balance, because generally in venture capital, we take all profit and we re-inject it into the startup for as long as possible to fuel growth. So revenue share is theoretically a little bit dangerous for digital companies in scale, because it means you're not applying all the money you're making to growing the company again. But the offset is, by doing an STO and raising, for example, $2.5 million now versus waiting to make X amount of percentage more each month and reinvesting that, it gives you a block of capital to do things with now.
Yeah.
So there's a trade-off. So I do think that most successful venture building is fueled by equity capital in some certain way. But what is brilliant is, as soon as you're able to tell a story that says you can trust us to create more growth, more traction, and that in our particular business model directly relates to more revenue, then we are an interesting investment for both of us. It gives me capital to scale faster, and it gives you a less risky investment than an equity investment into a startup, which takes longer to get, but also most likely has less returns. But when you do, it's a good return. This is a lot more trustworthy. You can most likely believe that in the future, you will make as much money as you make this month or more, all things being equal. And then you just have to look at how long it takes you to manage that investment and get your money back out of it and get the return that you want. And as long as all those details make sense, it's a much less risky investment. I find that to be fascinating, and it's great for both sides of the equation.
Okay.
You and your investors.
Yeah. So yeah, that was it. Ethan,
awesome.
Thank you very much, and wish you all the best, and talk to you soon.
I look forward to hearing great news about Kriptomat.
This was Ethan Pierse with us, and we're going to do also a blog post about that, so you can also read all the takeaways from this. And this is it from now. Bye from Croatia.
Ciao.
Thanks.